Hello YouTube land, this is coinpicker.us with a very quick update and some definite investment ideas to profit in 2019 and beyond. Let's start with the big picture on where the Federal Reserve balance sheet is. It has been level to decreasing for the past several years. Now, this is not strictly true in that if you look at this chart, which is not by a government agency, it's calculated with real statistics based on the past method of increasing money, you'll notice that despite the fact that the Federal Reserve claims that the money supply is level, it has been increasing. That accounts for what we've seen in the stock market and a lot of other asset bubbles, including real estate and several other asset bubbles. But the rate of increase has taken a bit of a dive since 2017. It dropped a little bit, now it's risen. And again, over here it shows a little bit more extreme. We saw it drop here, and now we're rising slightly. What happened a couple of days ago with the Federal Reserve was that the chairman, Powell, stated that, okay, we're going to go easier on rate raises, as in not engage in any right now. Doesn't mean they're necessarily going to begin reducing rates, so that is certainly a possibility. And he's also stated that we're no longer going to do what's called quantitative tightening, where they let debt roll off of their balance sheet. They've let quite a bit of debt already roll off their balance sheet in the neighborhood of $200 billion, which in the scheme of a $16 to $20 trillion economy, of course, I don't believe those numbers. I think it's significantly smaller because they count government in there, but that's besides the point. 200 billion doesn't seem like an overwhelming amount, but it has a magnification factor of somewhere in the neighborhood of 5 to 10, depending on how you scale it. So it is a truckload. It is an awful lot. But that type of behavior is what partially caused the stock market bubble to burst. Now that it is being pulled away and the Federal Reserve may begin pumping again and producing more fake currency, the stock market bubble seems to have regained legs. I do not buy it. I do not think that the stock market is an absolutely great place to be, though it could potentially get back to its old highs and supersede them. You're at the tail end of it nonetheless. Where is a good place to be? Oh, all right. Well, cryptocurrencies are not right now. At some point, they're going to catch a bid, but they haven't entered that phase, and I've been open about that for quite a while. Anybody who's been following me knows that I haven't been beating the drums to get into crypto. There has been some money made, but it's not easy money. You have to be very careful in how you choose to engage with the market, and you have to spend a lot of time at it. Not really worth it. However, there are some areas to make money, and I'm going to point those out to you. Gold and silver are catching a major bid. In fact, if we were to take a look at one of my sort of secret sites on gold and silver that I like, 24-hour gold, what you'll see is that gold has had a significant pop-up in the dollar while it has already been rising in other currencies. Silver as well, back up to 16, over 16. They have a way to go. Gold really needs to hit 1350 to challenge a new run. Silver probably somewhere in the neighborhood of 1650 or higher, 1680 I would say, to challenge a new run. But nonetheless, this is positive and it shows the direction for future investments. So there are two ways to profit from this. Of course, you can buy gold and silver. You can buy options on gold and silver. You could, if you wanted to, buy futures on gold and silver. I recommend the very first thing, and this is what I do as well, the very first thing you do is you buy physical gold and silver from a local dealer. Ideally, that local dealer doesn't charge you tax on it. If they do, there are several states that for instance, the state I'm in charges tax. I think it's ridiculous. You can buy from out of state, but you buy gold and silver in your hands. That's the first thing. And so if you have, let's just say for the sake of argument, you have $5,000. You would buy $2,500 in gold and silver, and then the other $2,500 you potentially, and I'm not giving anybody specific financial advice, just saying what I would do. You then would invest in projects like Nexus Gold Corp at 10 cents 10 cents. It is not a producing mine yet, but it will be, and it is a legitimate project. And what you'll find happen, well, it can go both ways, but what tends to happen is that the mining companies will produce far larger returns than holding the metal at the beginning of a market. So for instance, once gold and silver begin to rise more dramatically, gold gets over $13.50, which could happen next week for all we know. I mean, $10, 15, 20 in a day isn't that big of a deal. The mining companies could go from 10 cents to 12 to 15 cents. So if you just very quickly, so you can see a much greater increase in your capital returns in the mining companies at first. Later on in the market, you will want to potentially get out of the mining companies and go more into the actual metal, because the actual metal eventually often outpaces the mining companies. But in the initial phases, mining companies will generally outpace the metal. So that's how I play it. I essentially let the mining company returns buy more metal for me. That's how I have played it in the past. Another one that I like, and I have not purchased either of these companies yet, but I'm planning on it, is called New Carolina Gold. This is another one that is not producing yet, but is likely to and could be bought out. It's at 15, 16 cents. Well, the low 52-week range is 15 to 61. So it's today, I don't know what it's at. I'm not really sure what it's at today. But the bottom line on it is, let's say it's a 60 cents in Canadian, could be 50, 45, something like that in American. It's still a very inexpensive stock. And these are the kinds of companies that when they're bought out, they could go double, triple, or more. So that's the kind of thing that I'm looking to do and the investments I am making. Now, as far as the general stock market, the trades that I had recommended earlier, which were shorting Facebook, shorting Netflix, shorting Google, and all of those should have been closed a while ago. They were enormously profitable trades, but no longer is that a good place to be, because we're on a rebound cycle. At some point, not yet, at some point I will state that, yes, we can short again. I would not go long on them, because while they'll have going long being buying a call option, because while they'll have an increase potentially, and they already have, Facebook has, I don't think it's either long-lived or going to be a magnificent rise at all. And the trend is more to the downside than to the upside. Despite the fact we've had a strong January, we might have an okay year in terms of the stock market, but it's not going to be, in my opinion, it's not going to be a barn burner to the upside. Whereas gold and silver and other inflation-timed vehicles, and potentially some cryptocurrencies, I limit those, but some cryptocurrencies could see a significant return this year. So for my subscribers, I am going to be detailing more of these investments, other inexpensive stocks, and I focus on strictly inexpensive ones. I don't want, $120 stocks or $75 or $50. I want ones that are 10 to 50 to $1 to maybe $5 at the max, the type that give you quick doubles, triples, etc., or 10x. That's what I look for, because I think that that's the way to trade in the resource sector and not spend a significant amount of money for stocks that are speculative to begin with. So that is all I have for now. For my subscribers, I will be posting an update by tomorrow. And for the rest of you, go ahead and go to coinpicker.us. Let me post it right here, coinpicker.us. And you can sign up for my free newsletter. And at some point, if you decide you want to get more specific on the trades and the type of trading and investing I recommend, go ahead and subscribe for the premium section. But that's it for now. Thank you very much.